Hello and welcome to another ACY Securities daily report video. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first topic I'm looking at today is on Joe Biden's $1.9 trillion stimulus package. They've managed to get a vote through the House, so now all we're really waiting on is seeing him sign off on the deal on Friday. Now, what does this actually mean? It means that we're likely going to be seeing most adults in the US receive $1,400, at least up until those who are single and making up to $75,000. If you get to $80,000 or above, you get nothing, unfortunately. But it also applies for couples. Now, if you are a couple and you earn up to about $150,000, then good news, you're going to be getting $1,400. Of course, there's also news for unemployed persons who might have been laid off or furloughed. They'll be getting a top up to $300. And the bill has also had a little bit of controversy and a bit of difficulty getting it through. It was a very, very close vote, but regardless of that, it has managed to get through. Now, the issues that did come up was that the bill has stripped those minimum wage increases that were talked about last week. Now, looking at the next stages of this stimulus bill, what's actually in the stimulus box? Now, there's $1.9 trillion so far. We know $160 billion is going towards a vaccine program. $360 billion is going towards state aid. $300 per week to those unemployed persons, plus $170 billion going towards schools and getting them restarted in the economy. We've also got $45 billion in rental aid for those who may not be able to afford their rent, and $14 billion towards airlines and airports, and $25 billion towards small and medium enterprise assistance, those small businesses who might be struggling to keep their heads above water. So it is a very extensive package. It is massive. And it is likely going to have more than just an effect in the US. We're going to be seeing things occur across the globe. But what does that actually mean for the inflation part of all of this? Well, we've seen a lot of inflation anxiety, and it's been getting higher and higher the closer we lead up to this stimulus package. Consumer prices at the moment are actually sitting up at about 1.7% for February year over year, which is actually down 0.1% overall on that figure. The underlying target as well has hit 1.3%. Now, in the underlying consumer inflation, we see food prices taken out and a couple of other metrics, and that one is down 0.1. So we really more follow that underlying inflation rate rather than the consumer prices. Of course, US equities have risen on that news because there was an inflationary concern for a while, and now we've seen that sort of flip again and the rotation has gone up. That doesn't mean that tech stocks are back in favor. They have actually dipped down after yesterday's gains. But otherwise, we've seen the Dow Jones hit an all-time new high above the 32,000 mark. Now, there are likely to be some inflation shocks on the way. I personally feel that there is too much money chasing very few goods and services in this instance of a package. Of course, that means we're going to have a pretty weird inflationary response. There are going to be spikes in some areas and probably the opposite in others. So we're going to have to keep an eye on how things travel forward from this point on, particularly on inflation and those bond yields. Now, realistically, what does the Magic 8 Ball say at the moment about this whole dynamic? Really, the US dollar is a little bit cloudy. It's hard to sort of gauge whether it's going to be long or whether it's going to be short. What we do know is that investors are moving their funds out of emerging market currencies and, of course, emerging markets. Generally speaking, rising yields will logically make borrowing costs much higher. And that's not so great if you're a developing nation who is dependent on the US dollar as a part of your borrowing costs. A lot of countries do actually go and get their borrowing figures in USD. So that does become a bit of a problem, and it means that they're likely to see a little bit of deflation occurring, or maybe not deflation, but at least a slowdown in their economy to some degree. Now, that's not a great symptom to have, and it means that you are probably going to see higher figures of inflation, just as we do now, in some of those developing countries. Now, at this stage, the other factor to consider is the Fed. How's the Fed going to act with this? So far, we've all been really ignoring the mantra of the Fed talking about $120 billion worth of asset purchases per each month. Of course, this might mean they have to actually change a little bit of their strategy moving forward. Now, realistically, that's all I have for you on this front at the moment, but I do have more videos coming out today on some of the other things that might matter to you, such as the ECB. So if you do have any questions about this video, please feel free to shoot me a message via any of my social media channels. Of course, you can always leave a comment on YouTube. Don't forget to check your economic calendars. I'm putting one up on the screen for you right now. to have a bit of a quick squiz at, but of course there might be something here I've missed that might be important to your own trading. So make sure you check your own calendars. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.